Which candles should you use? The Heiken Ashi or the regular Japanese candles? This has been a question that's been asked a ton in the Discord, and I've made a lot of videos and I use the Heiken Ashi candles. Now the truth is, when you're scalping on a 1 minute or 3 minute time frame, you want to be getting your entry using the Japanese candles, because the Japanese candles is real price, right? The Heiken Ashi is an average, right? It's a trend. It shows the overall trend, but it's not the actual price. So to get that most optimal entry, you want to be entering your trades with the Japanese candles. And let me show you what I mean. So first things first, if you'd like this buy sell indicator for yourself, hit the first link in the description. It is the best buy sell indicator on TradingView right now, and it comes with these automatic support and resistance levels. And then I'm also using another free indicator called Fu Manchu Cipher B divergences. Now I'm going to show you guys real quick how you can enter and exit using this indicator with the Japanese candles. So first things first, you see these low and high levels identified here on the chart using EzAlgo. Now it's extremely simple. What you're going to be doing is taking longs down here and taking shorts up here, right? That's all that you're doing. And then you're looking at Fu Manchu Cipher B for divergences as extra confirmation once you're already in the trade, and of course the buy sell signals. So if I go back, I'll circle, right? This is real-time price action, okay? Real-time price action. I'm showing you guys, when price comes to these levels, what it does, okay? What price is doing at these levels. You see that there is a strong rejection at all of these levels, okay? We even had a little one right here and a little one right here. Now, I'm gonna pretend I'm entering all of these positions, okay? I'm gonna put my stop loss and take profits in place and show you guys, how possible this is, because it really is not rocket science. You're waiting for price to come to a level, and then you're entering based off that signal. So if you had used this strategy using the Japanese candles, right, waiting for price to come to a level, watching for an initial reaction, and then of course a Fu Manchu Cipher B dot or divergence following that with a buy or sell signal during the past 1 2 3 4 5 6 7 8 9 trades. All right, 9 trades. Looks like I missed this one right here, which would have been a stop out as well, right? This would have been a stop out. So 9 trades, okay? 2 of them were stop outs. All right, 2 of them were stop outs. This was a stop out. We lost 0.38%. And this one was a stop out right here. We lost 0.28%. Right? Now you can see the risk to reward on these trades are huge. And I'm being very generous with the take profits, right? This was a resistance level at the time, right at around here. Okay, so that's why I took profit right there. And it was still almost a 3-to-1 risk to reward ratio. And honestly, the stop loss could be a little bit tighter, but I'm being lenient in this video to show you guys, what's possible. We come back up to this resistance level right here. Real-time price using Japanese candles. We come up, we see sellers are pushing the price down, and we get this evening star. All right, so that's a bearish candlestick. So we're going to enter on the closure of that candle, probably put the stop loss right here, and take profit at the next support level, 3.5-to-1 risk to reward. We come to this level again. We made a new support right here at the time, right? So we would take profit there once again, another 3 risk to reward ratio. Comes to this level again, take profit at the same spot. This, we could have taken profits right here, actually, right? I'll be easy, right? So ideally, we probably would have taken profits at the support level. So still, almost a 4 risk to reward ratio. Come down here, we get stopped out here, okay? We get stopped out here because the next support was right here, so we didn't quite win that trade. But that's okay, because we took this long down here, right, with a bullish divergence right here. We see a clear rejection on the Japanese candles, right? A clear rejection off of this level. Enter the trade right there and take profit at the next resistance level. All right, same thing here. We came back up to that level, got an initial rejection, took the sell signal, unfortunately got stopped out, right? Got stopped out on that one, came back up to this level with a sell signal and take profit at the next support level, which is right around here, okay? Or you could have taken profits right around here at this support level. Almost a 5 risk to reward ratio. Your losses are small, your wins are pretty big, and that is how you use EzAlgo support and resistance levels to enter and exit trades profitably using the Japanese candlesticks. Can you do this using Heiken Ashi? Of course. The problem with using this on such a low time frame with Heiken Ashi is that the entries will not be as accurate as they could be. right? They're not as accurate as they could be because this takes the average, right? It's not real price. It takes the average and shows the overall trend. So what I would recommend is have a split screen where on one side you have the Japanese candles for that entry, and then on the right side of your screen you have the Heiken Ashi for the overall trend. And it's also important when you're in these kinds of scalp trades that you get in and get out pretty quickly, right? I'm not gambling with my take profits here. You know, as soon as price comes down to the support level, I'm out, right? I'm out. If I would have kept holding, I would have got wrecked, right? So, you know, I could have made a lot more on this trade, for example, but there's no way of me knowing whether price is going to keep going down. You know, we did get this bearish divergence, right, with that sell signal, but still, to be safe, if I'm in good profit on a forward risk to reward ratio, I'm going to get out. There's obviously going to be those small losses, but when you follow this strategy, you stay consistent, the gains will outweigh the losses. You know, I took this trade right at around here this morning, okay, because I wasn't up in time. Of course I slept in, and I think I sold right here, okay, at this resistance level at the time. And, you know, I should have kept holding, right? I should have kept holding, but I was in profit, and I made like 20%, so I'm happy with that. Of course, you know, I missed the sell signal. I was looking at this high level to take a short, and I missed it, of course. But it goes to show you, know, that would have been another winning trade, over a % gain. Now, if you're trading with 50 to 100x leverage, forget about it. You know, you're going to be surprised once you get this strategy down using these levels. You'll be surprised how quickly you start to get it, and you'll get in the rhythm, and it'll be like clockwork. So I hope you guys enjoyed this video. Hope you guys learned something new about the Japanese candles and how I use them to enter and exit on a lower time frame, like the 1 minute or the 3 minute. When I'm using the 5 minute, I'll usually have the split screen, but pretty much any other time frame other than that, I'm just going to use Heiken Ashi. Makes it a little bit easier, in my opinion, on some of those larger time frames, but definitely if you're scalping, you need to have the Japanese candlesticks open for that entry. Please leave a like on the video, subscribe to the channel for more trading content, and I'll see you guys next video.